Hi everyone. Someone in an SCHD forum posted this last week. It just hit a new high. Should I wait for it to pull back? Over 200 people replied. Half said wait for the dip. Today I'm going to show you exactly why that advice, repeated in every investing community every single day, is costing people thousands of dollars they will never get back. Not with opinions, with 100 years of real data. Stay with me, this one will change how you think about buying SCHD forever. Researchers ran the ultimate investing experiment using nearly 100 years of US market data. They created 4 investors. The first had a crystal ball, perfect knowledge of every future crash and every market bottom. This investor always bought at the exact lowest point, never missed, perfect timing every single time. The second investor did something boring. They invested the same fixed amount every single day. No research, no timing, no thinking. Just bought on the same day, every month, no matter what the market was doing, and no matter what the headline said. Here is what happened over every 40-year period in the study. The boring monthly investor beat the perfect dip buyer 70% of the time. 70%. Why? Because while the perfect dip buyer sat in cash waiting for the market to fall, the monthly buyer was already collecting dividends and compounding. Time in the market was doing the heavy lifting. The cash on the sidelines was doing nothing. And here is the number that makes it real. If the perfect dip buyer missed the exact bottom by just 2 months, which every real human being will, their odds of beating the consistent monthly buyer collapsed from 30% to just 3%. 3%! That is the full price of all the waiting, all the watching, and all the stress. The painful truth is that the dip you are waiting for may never come. Or it comes briefly and recovers before you feel confident enough to buy. Either way, the monthly investor was collecting dividends the entire time you were waiting. That is time in the market that no future dip can ever give back to you. Now let me bring this home with SCHD's own numbers. Since launching in October 2011, SCHD has delivered around 13% per year on average, including dividends. That is one of the strongest long-term track records in the entire dividend ETF universe, not just among dividend funds, among all ETFs available to regular investors today. Here is what makes that number remarkable. It does not matter when you bought. An investor who bought at every single peak, the worst possible timing across SCHD's entire history, still earned strong positive returns over the full period. Even the worst possible entry points, held long enough, produced real wealth. Because SCHD does not ask you to time it, it asks you to own it. Think about what that means. Every single person who bought SCHD at a high, held it, kept collecting dividends and kept reinvesting, every single one of them came out ahead over a full market cycle. The fund's quality screening, its defensive sector mix, and its consistent dividend growth did the work. Not timing, ownership. And even near its highs, SCHD trades at a significantly cheaper valuation than the broader S&P 500. So an all-time high in SCHD is not the same as buying an overpriced fund. It is simply paying fair value for a quality income machine that keeps growing its payout year after year. Here is the damage that waiting actually does. In real money. You have $500 a month ready to invest. You decide to wait 3 months for a better price. In those 3 months, the investor who kept buying made 3 purchases and started collecting dividends on every one of them. Their compounding engines switched on. Their snowballs started rolling. You earned nothing. Your money sat in cash. Now, here is where it gets serious. SCHD has grown its annual dividend at around 11% per year for the past decade. That means this income machine does not just pay you. It pays you more every single year, automatically, whether the market is up or down. Every month you delay, you are not just missing today's dividend. You are missing every future dividend increase from that share, compounding forward for the rest of your investing life. Think about that for a moment. A dividend that grows at 11% per year doubles roughly every 6.5 years. Every share you delay buying today is a share that misses 6.5 years off that doubling cycle somewhere down the road. By year 20, the investor who started just 90 days earlier, same amount, same fund, will have meaningfully more in annual income. Not because they were smarter, just because they started sooner. No future dip can hand you back that lost compounding time. Now, I want to be completely honest with you. Yes, SCHD could drop after you buy. In 2022, while the S&P 500 fell over 18%, SCHD fell only 3.23%. one of the best demonstrations of its defensive strength in its entire history. But drops happen, even to SCHD. Here's the mindset that separates the investors who build real wealth from the ones who just get stressed. When SCHD drops, your same monthly investment buys more shares. More shares means more dividends. More dividends means more compounding. For a long-term income investor, a price drop is not a threat. It is a discount on a machine that was already working for you. You do not stop buying groceries when prices are normal. You stock up when they go on sale. The investors who built real wealth with SCHD are the ones who kept buying through every dip, every scary headline, every moment of doubt, because they were thinking like owners, not traders. Owners accumulate. Traders wait. And waiting costs more than most people ever realize. Here's what the data tells every SCHD investor to do. Simple, boring, and proven. Pick an amount you can invest consistently. $100, $300, maybe $500, whatever fits your life right now. Buy SCHD on the same day every single month. Reinvest every dividend automatically. Do not check the price. Do not wait for a better entry. Do not let a good week or a bad headline change your plan. Just buy and hold. That is it. That is the entire strategy. The 100-year research is clear. Consistent buyers outperform perfect dip buyers 70% of the time. They outperform real dip buyers 100% of the time, because no human being buys at the exact bottom. We always miss it slightly, and even that small miss destroys the entire advantage of waiting. The investor who started the strategy at SCHD's launch and never stopped is sitting on one of the most powerful personal income streams available to any regular investor today. Not because they were brilliant, not because they timed anything, because they refused to wait. Let me leave you with this. The market will always give you a reason to wait. It'll look expensive or uncertain or like it might pull back next month. That feeling never goes away. It is a permanent feature of investing, not a signal to act on. But SCHD's dividends are also permanent, and they are growing every quarter. For every investor who owns shares today, 100 years of data points in one direction. Time in the market beats timing the market. Not most of the time, every time. Over every period ever studied. Stop waiting for the perfect price. The best time to plant the tree was yesterday. The second best time is today. If this changed how you think, hit like and subscribe. Drop a comment below. Are you waiting for a dip right now, or are you buying every single month? Be honest. I want to know. I'll see you in the next video. Smart investing, profitable results. This video is for educational purposes only and is not financial advice. Past performance does not guarantee future results. Please consult a licensed financial professional before making investment decisions.